Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 8th of March, comes to you from London. And surprisingly, quite a lot of green on the screen this morning after a pretty bloody session yesterday after the Federal Reserve Chairman Jerome Powell, speaking to the Senate Committee in the US, suggested that interest rates were going to go higher, and the market is reading that they're going to have to go higher for longer. And so we saw the dollar leap on that, a really big move on the dollar. We were talking yesterday morning about how the dollar was undergoing a long-term recovery, having found the trend support on the cloud. This is the weekly cloud. And then on the daily, we're now seeing the price back above the cloud. So this downtrend in the dollar looks like it's coming to an end, and we're starting to see resurgence in the dollar. And of course, the short term is bullish. Those targets were there yesterday, that 105.84 now met. And we're looking to targets some 1 to 4% higher. So really significant. Remembering this is my weekly, daily and 60-minute, long-term, medium-term and short-term view of the market. And of course, you can watch Charts Today every day at chartstoday.com. I post it there first, and then occasionally I will share it in other places like Twitter, LinkedIn, etc. But Charts Today is where it goes out first, so that clients and followers get it there first. So we're looking at the dollar. That means that, of course, the euro turned weaker. We're seeing that at 105 now, having hit that cloud resistance. It's the reverse of the dollar index finding cloud support. The euro hit cloud resistance and fell away heavily yesterday on that announcement. Stronger dollar, of course, causing a lower euro. So interestingly, we're seeing these downside targets, and of course we've got these big downside targets for the euro given a long time ago, but still hanging over us, and that upside target is not activated. So that's quite key. We'll see new targets developing on the short-term chart. Remembering, if you're trading currencies, you really want to be looking at the 1-minute charts for your real-time targets. That's going to really help you. Now, looking at sterling, weaker here against that dollar, and just again having really been hitting cloud resistance for some time. Now clearly below 120, fell away quite sharply there. That stronger dollar, and we've got target some 2.5% lower. And against the euro, sterling sitting at 112.30, so even weaker than the euro was against the dollar, and we're seeing that trend just potentially pushing lower there as well. Against the Aussie, one I'm following at the moment, the Aussie dollar fell quite heavily. Interest rates in Australia not set to rise as quickly as in the UK, and so that means that sterling is falling less fast, and we saw that 180 level hit yesterday, and a new upside target to be generated off that column. Really, again, one to watch. Bitcoin fell back. Risk assets, of course, just hit really across the board yesterday. So we saw Bitcoin falling back below that 23,000 level, and now just nudging 22. So interestingly, we just can't get above that cloud, and that upside target, we're watching for that to be negated. Something to watch there on the Bitcoin chart. The Nasdaq was hit as soon as those comments were made by Powell yesterday. No surprises there. If you're involved in US stocks, remember that we are in a bear market and have been for a few months. Long-term bear market means these rallies, you've got to be quick, and you've got to accept that they're counter trend, and we're seeing that move of the last few days now just unwinding. A lot of volatility, a lot of uncertainty, and now the downside targets are what we're looking to play for. This upside target will be negated if the Nasdaq makes new lows, of course. So really significant there, and just the message is, and it's an old adage, don't fight the Fed. It looks like they're going to keep raising rates, and that's not going to be good news for markets. Taking a look at the futures today, we're slightly up on the S&P future. The Nasdaq is up 0.25% after yesterday's falls, but on the whole, we're seeing markets flat. And the UK markets, European markets took the falls in their stride yesterday. We saw the DAX fall away. The markets were all able to do this before the close. So we saw most European markets following the US on those comments. So just again, we're seeing a little bit of recovery this morning, having fallen away yesterday. And European markets looking better than US markets because we are moving back above the cloud there. So that's quite significant. Asia, we saw the Hang Seng, Japan was up 0.25%, bucking the trend there. The Hang Seng down 2.3%, so Hong Kong badly hit. The Indian market up slightly, and the Aussie market hit, given that the Aussie central bank has just raised rates 0.25%. Probably wish they'd listened to that testimony. They might have gone for half. The market now, and I was probably thinking that the Reserve Bank of Australia is going to be in a bit of a bind and probably will have to raise rates. But for the moment, it's all about the US on that. We'll look at the energy mix in a minute. Gold was really hit badly yesterday on that on those Federal Reserve comments. Just sharply fell away. Having got to the 1850 level and above, we're just back now into the low 1800s, so not looking good there. Silver knocking on the door of $20 to fall below there, so that's really significant. We have actually nudged below there this morning, so that's a pretty critical number for silver. And we saw things like platinum and palladium really badly hit, and these charts looking more bearish still. We've seen that clear downtrend in palladium, bearish on all three timeframes, and really hit heavily yesterday. US 10-year yields just nudged $4 on those comments. No big surprises there, of course. Yields have been a bit all over the place, but as soon as those comments were out from the Fed, we were back above 4% yesterday, and we got these upside targets higher, lots of mini upside targets, and the bigger ones are much higher still. So again, if you're watching the yields, that's going to be bad news for markets as we get to those sort of levels. Now, looking at the energy mix, we put out our poll result this morning. We did a poll earlier on Monday on LinkedIn. How low, where was the bottom for TTF Dutch gas? And we posed the numbers 43, which was now 35, 30, and 25. Interestingly, the results for this were all evenly matched pretty much. So it was 25, 25, 25, 25. A quarter of people chose each level. But what that really tells you is that 3/4 of the market, the consensus, 700 traders voted for this. The consensus is that 3/4 of the market believes we're not at the bottom and we're set to fall further. And at least a quarter of the market, or half the market, thinks we're going below 30. We're sitting at 43. So really the consensus is we're not at the bottom. Of course, the best thing to do is to look at the targets, and you just click on the charts. Here I've got my weekly cloud, my daily cloud. We're still bearish below the cloud on both the daily and the 60-minute charts, so medium and short-term bearish. Downside targets here. Notice how these targets on the 60-minute chart, 42 was given as a target, and they were given right back at at the 50s level, and so watching those targets is going to be really, really key. And even these targets, 37, those were given way higher, back at 65, and again, no one really believed those levels, but that's where the targets are. You cannot ignore the thrust targets. Now, looking at Brent crude, we had volatility here yesterday as well. Really seeing that fall away, those Fed comments not helping, and the crude just tumbled. We're still in this triangle pattern, so we have to see whether we're going to break out. Below 80 is bad, above 90 is good for the price. Basically, you're bearish below 80, you're bullish above 90, so that's going to be really quite key. US nat gas sitting at 264, below 250 is bad, above 3 is good in terms of bullishness and bearishness, not if you're a buyer, of course. Coal is sitting below 130 now. Notice this morning the story that the UK, we've got a cold snap in the UK. Most of the UK snow covered this morning, and they're firing up the coal power stations. But of course, that doesn't really affect the price. Most coal's already been bought for that, and we are still in downtrends there with targets lower. Emissions is sitting at 98.35, having another push. We called it bullish this morning for clients. We were at 96 then. We're now at 98.35. That was out in our morning report. We're pushing back to that 100 level, still bullish on the medium term chart and moving back into bullish territory on that short term chart with upside targets. And of course, we put our report out on coal as well. And last of all, we take a look at German power, looking at the EX price there, sitting at 141. Interestingly, we just didn't quite get to that 145 target. New target kicking in this morning. If you're trading power, use those 1 minute charts. That's it for today. Markets in a mix with after that Fed announcement. Until tomorrow, we're going to now watch for payroll numbers on Friday. That's going to be really critical. If they're strong, that means overheating, and the Fed's going to want to do more. Until tomorrow, happy charting. Bye for now.